Ryan, this is your perfect intro music.
That sounds fantastic. Thanks, Ben.
Ryan,
Thanks, Eric.
Ryan's got high hopes, doesn't he?
He does. Ryan Leopold's back with us. Welcome back, Ryan. How are you today?
I'm awesome, man. Thanks for having me.
Yeah, my pleasure. Good day out there.
Wish I was golfing.
I know you.
But I'd love being here.
It could be dumping rain. You would be wishing you were golfing.
Absolutely.
Okay, so let's hit on this real quick, because a lot of people, there's this big misconception that underwriting is so hard, right? And that people can't get their loans done. That's not really the main issue.
Well, I think the biggest thing we have to keep in mind is that, loans are happening out there. People can do mortgage and get financing done. And you can do it. Some people say that you need 20% down and everything has to be perfect. But the reality is you can do 20% down. You can do 10% down, 5% down, as low as 3.5% down, in some cases, 0 down. So the underwriting standards really are back to where they were in the 2000 to 2002, 2003, where, you have to have a job, you have to have decent to good credit, and you have to have money for a down payment, at least some money in the bank. So the standards really are pretty fair and pretty logical. But I think the challenge is with underwriting is just the process that a file has to go down to get approved. That's just taking a lot more time. That creates more frustration, more anxiety, and more just kind of makes the process a little bit longer.
And this is really because it has to be perfect.
It does. Absolutely.
And by perfect, every page 3 of your bank statement has to be in there perfectly legible. Why is that?
What I tell clients now is you have to work as a partnership with your lender today more than ever. And again, instead of just picking a lender out there to buy a home, you need to have a partnership with your lender if you want to have at all a smooth and uneventful process in a challenging market. So I think from an underwriting standpoint, like I said, the guidelines are still the same as they've always been. It's what we need in a file, which become frustrating and obnoxious, and the logic of it doesn't make any sense until you really dig deeper into what the lenders are dealing with out there. And this is just small banks, brokers, and all the way up to the big banks are all dealing with the same thing, because 95% of all loans that are originated are sold back to Fannie Mae, Freddie Mac, FHA, and VA. That's about 95% of all mortgages. And they have a very, very high standard of what they want to see in those loans to make sure that they're buyable by the big institutions.
Really, it's in the file. When they start selling the file.
Yeah. So, it's not a fun topic to talk about, but I think if you're a prospective buyer or somebody looking to refinance, I think you need to understand what every single bank or mortgage company is dealing with right now when it comes to the stuff that you have to provide to make your loan approvable. So you're dealing with, the top 5 things that I've run into, which makes a loan unsellable. So it takes the underwriting times of each individual file up. I think, back in the day, underwriters could underwrite 3 to 5 loans a day, maybe. Now they're lucky to get through 1. So we're talking about, let's just say, easy things like page 3 of a bank statement. Okay, you need all 4 pages. Let's just say you need
even the one that says this page is left unintentionally blank.
Intentionally blank says 1 of 4. If 4 is missing, unsellable loan. And the lenders are getting kickback on these things. So let's just say a lender originates a $300,000 loan and one of these things isn't there, like signed in the wrong area, a box isn't checked correctly, bank statement with the wrong pages, not updated pay stubs, appraisal issues uncorrected. All these little things makes it a buyback for a lender. So say they originate a $300,000 loan and Fannie Mae refuses to buy it. That's a $300,000 note that's kicked back to the original, originator of that loan, and they're not in the business of owning $300,000 notes. They get rid of them as soon as possible. So all these little things that happen creates a ton of anxiety and stress and, things that used to not be there. So little people who bought houses, 7 or 8 years ago, they're just flabbergasted on the things that we need to get a deal done. And we're just trying to help them through the process by being prepared and organized up front.
So talk a little bit about how to prepare, because, there are clients who go through this process. And I've heard everything from miserable to the worst thing ever to it's not even worth it anymore. And I think you hear it from other lenders. It's pretty common speak that's what people feel like they're going through when they get a mortgage.
Yeah.
Regardless of how hard how professional a person is in getting the whole process started. But when you ask for page 3 of a bank statement and it comes over illegible, and people get frustrated because people want things done quick and they don't feel like they should have to do the work.
Absolutely.
but they still want $500,000. That's the funny part. Oh, I shouldn't have to do that. It's only $500,000, right? How can a lender and client really partner together to really prepare, and assure that smooth and uneventful transaction?
Yeah, I think it's a couple sides. One is going to be if it's a first-time home buyer, they've never really gone through this before. So the things that we're asking for and how you can be better prepared is asking for everything up front, having disclosure and having that conversation with your clients and saying, look, I know it's going to be obnoxious. Some of the things we need are not very logical, but it really, if we can get those things up front, it's going to minimize the things that we need along the way, and especially 3 or 4 days before closing, where stress and anxiety is even higher. So I think it's being better prepared and better organized. And as a first-time home buyer, they've never dealt with this before, so at times they seem to be a little more accommodating. The biggest challenge we have when someone's bought 4 or 5 homes before, and they're sitting there wondering, they've never gone through this before, and they fight it every single step of the way. And in reality, a good lender is really just trying to help them through the process to make it a better experience and have a better outcome, and getting the final documents and that final approval done sooner than 2 or 3 days before close, which that's where you have really high stress and high anxiety. So if you can get it done up front, that's the highest and best case for everybody involved in the transaction, including everybody else, because you have sellers involved. Not only have buyers, you have sellers, you have agents on both sides, you have title, you have escrow, you have appraisers, you have inspectors. Be prepared, be organized up front, and a good lender is going to be very specific on what we need from day 1 as opposed to day 28.
Yeah. So what else, you talk about being up front. Now, really what we're talking about is being prepared with all the paperwork, because that's what I think this comes down to. People are like, oh, underwriters, I hate underwriters now. But it's not like it's their money.
Right.
So there's this element of you got to fulfill the guidelines that are important. And that's really what it comes down to.
Well, that's an underwriter's job right now, is not only fulfill the guidelines, which is you have to have this credit score, make this certain amount of money, have this much for a down payment, and all the rules that come in with that. But like I said, it's those small things. It's the small details which is going to allow the process to progress a lot easier than not.
Yeah.
And it's those small details. We had a client this weekend that they were thinking about making an offer this weekend. I said, if you're thinking about making an offer, let's update everything in the file from day 1. So that way, if you do get it accepted over the weekend and we're ready to go on Monday, we have a full file on day 1 that's updated from a pre-approval of 4 months ago. Then let's wait till you're under contract and take 3 or 4 days to gather the stuff. Let's just be on it from minute 1. It makes it so much easier for everybody.
Yeah, I think there's an expectation, too. We've talked at length about setting an expectation, and clients need to understand, especially in today's world, with real estate, with financial planning, with all these elements, there's a little bit more due diligence that has to be done. It's actually for the protection of, I guess the entire country, since the whole thing just about collapsed when we didn't ask for page 3 of a bank statement. So, everybody's part of a process now that has changed, and that preparation and what they can do up front makes the whole thing smoother.
Yeah, I think the consumer can actually, like I said at the beginning, take a partnership role in this and say, okay, I'm a consumer looking to buy a house, looking to borrow $400,000 with $10,000 down. What exactly do you need from me? What should I be prepared for? Me as a buyer, what expectations should I have of you, the professional, as I embark down this major life change, this major financial investment, so they can be better prepared, better organized, and really, like I said, working together with your lender to have a great experience at the end of the day. And I think that, if a buyer, whether it's a repeat buyer, a first home buyer, an investor, anything, takes that approach, it's really going to help them in the long term, not just us to do our job. So help me help you philosophy from Jerry Maguire.
I love it. Jerry Maguire. Preparation is certainly the key when it comes to getting a mortgage. Ryan, thanks so much for joining us and helping people prepare, because it can be a stressful time for people to do that. Well, you know what else is prepared? Heather's question for the whole group. We'll be right back after this break. Heather Moore is going to join us. I'm Ben Brashen. You're listening to Brashenomics.